Imagine this, an accounts payable inbox that lives on a shared mailbox. A forwarding rule sends all invoice replies to a personal address, and nobody notices. An invoice gets replaced with a fake one. A payment goes to a fraudster. 2 weeks later, payroll deposits start landing in the wrong bank account. Cash flow freezes while the bank and vendors untangle the mess. That's the micro case we're unpacking today. Fast, quiet, and painfully ordinary.
Quick heads up on what we'll do. Name the failure modes, show the dollar math, unpack legal flags you can spot without a law degree, and give a non-technical kill switch playbook you can run in a week. Jessica, Eddie, glad you're here.
Thanks, Dan. This is one of those deceptively simple things that turns into a legal headache fast. The evidence trail gets messy with forwards and auto replies, and that makes recovery and dispute timelines much longer.
And from ops, it's usually not a single mistake. It's a stack of convenience features, forwarding rules, delegation, calendar invites that change billing dates. Each one on its own seems harmless. Together, they create a path that's easy to exploit.
All right, let's define terms in plain English so listeners know exactly what to look for. When I say forwarding rule, I mean any automated action that reroutes incoming mail. Shared mailbox is an inbox multiple people access. Automation chain is when those forwards trigger replies or calendar updates. These are convenience patterns that quietly undermine who actually authorized the payment.
Now, I want to switch to the revenue lens. Jessica and Eddie, interrupt me whenever. I'll run numbers and prioritization heuristics so people can decide the 3 inbox flows to lock down first.
Start with the cost math. Suppose a mid-size vendor payment of $75,000 is misdirected. Immediate cash loss is obvious, but the real costs pile up. Bank recovery fees and hold times that can tie up cash for weeks, vendor penalties, expedited replacement shipments, and internal headcount diverted to reconciliation. Conservatively, recovery and operational disruption often double the initial loss, so that $75K becomes a $150K hit before you're done.
Then there's the smaller, higher frequency stuff. Payroll diversions, small vendor invoice frauds. Those don't make headlines, but they burn time. Accounting staff spend hours on chargebacks, CFOs waste cycles with banks, and senior leaders lose runway making decisions without clear authorizing records. If you're seeing 3 or more invoice exceptions a month, you're already paying a tax in time and risk.
From my side, a critical piece of the revenue story is evidentiary quality. If an attacker routes invoices through an autoresponder or creates lookalike addresses, it becomes harder to show who authorized a payment. Banks require clear and convincing evidence in many cases. Without retained headers, original message metadata, or a reliable chain of custody, you lose leverage with both banks and counterparties.
Technically, headers and original message metadata are the smoking gun. But many small teams archive nothing. Messages are deleted or auto-filed. A simple fix, start preserving raw emails with headers for billing and payroll mailboxes. That one habit makes recovery conversations with banks and vendors exponentially easier.
Heuristics to prioritize inbox flows. First, any mailbox that can initiate a payment or change payee details. That's top priority. Second, mailboxes tied to payroll or HR. Third, vendor-facing inboxes used for billing and contract amendments. If you can lock down those 3, you've dramatically reduced exposure for most small businesses.
Okay, Jessica, take us into the legal red flags. Plain English, what should people spot in a message chain that screams, investigate this?
Look for 3 easy-to-spot flags. 1, authority delegation that's not documented. An email saying, Bob okayed this, without a prior formal delegation memo. 2, sudden changes to banking instructions in a thread that previously confirmed a different account. And 3, messages that come from personal or free email domains claiming to be the vendor. Each of those should trigger a pause.
Beyond flags, here's practical language teams can use right away. If a payment detail changes, reply to the original invoice sender with, "We received a change request for payment instructions. For security, please confirm the change by calling our accounts payable line at insert number and provide the last 4 digits of your company tax ID." That little step pauses automation and forces a voice verification. 2 legal notes. First, keep an explicit, not legal advice approach inside the team scripts. That helps clarify when escalation is needed. Second, document every verification attempt. If you end up in a bank dispute, a clear timeline of confirmation calls and emails matters more than emotion.
From an ops perspective, let's talk practical controls you can implement this week. Start with a delegation inventory. List every shared mailbox, who has delegate access, and whether forwarding rules exist. Do it like a short audit. One column for mailbox, one for delegates, one for active rules. That inventory often reveals the low-hanging vulnerabilities.
Next, technical but non-scary. Enforce MFA on any account that can approve payments. Rotate shared credentials on a schedule with a documented handoff, and disable persistent auto forwards on payment and HR mailboxes unless there's an approved business case. Also, run a DMARC/SPF check. Those aren't perfect, but they reduce spoofing surface area.
Last bit here, a kill switch workflow for non-technical staff. If you suspect fraud, 1. Remove delegate access from the affected mailbox. 2. Place the mailbox in read-only for a short investigation window. 3. Capture and export the last 90 days of emails with headers. And 4. Notify the finance lead and legal counsel. That sequence is easy to run and protects evidence.
We promised a panel triage. Let's pick the top 3 mailbox flows listeners should inventory this week. I'm going to suggest vendor billing inbox, payroll/HR inbox, and contract change inboxes. Jessica, Eddie, agree or swap?
I agree with those 3. For each, assign an accountable owner, not IT or finance as a bucket, but a named person. Then use this outreach script. Hi, we're doing a quick security and continuity inventory for the mailbox name. Please confirm whether you need delegate access and list any forwarding rules by EOD Friday. That forces a response you can track.
Add a text step to that outreach. Ask recipients to screenshot their mailbox settings for delegates and forwarding rules and upload those screenshots to a secure folder. It's low tech, but it gives you something verifiable without needing admin access across systems.
Nice. Everyone who gets that outreach should be tracked in a simple spreadsheet with due dates and a rollback column. If someone accidentally breaks a workflow, you need a quick path to restore the prior state. Next up, the 30-day containment sprint, week by week. Week 1, inventory delegations and forwarding rules for the 3 priority mailboxes and aside owners. Week 2, implement pay confirmation language, enable MFA, and rotate shared credentials. Week 3, run a simulated invoice test and collect evidence. Week 4, review results, document a permanent governance policy, and hand off owner responsibilities. Jessica, Eddie, anything to add to that guidance?
Add one escalation rule. If at any point you discover a possible misdirected payment or unauthorized account change, pause all outgoing payments tied to that mailbox until you complete the kill switch workflow and contact your bank. That conservative pause is important. It stops additional damage while you investigate.
And schedule the simulated invoice outside business hours or with a clear test subject so you don't accidentally create confusion. The goal is to see whether the confirmation step works and whether any forwards or automations still trigger.
All right, rapid scenarios and exact next moves. Scenario 1. You receive a payroll change request via AutoForward that lists a new bank account. Next move, pause payroll, call HR's verified phone number on file, and export the original email headers before you do anything else.
Scenario 2. A calendar invite from an unknown sender alters a billing milestone. Next move, reply to the original contract approver asking for written confirmation of the change, and do not accept the calendar update until you have that confirmation logged.
Scenario 3. An autoresponder masks a phishing link in an invoice thread. Next move, isolate the thread, take screenshots, run the link through a safe URL scanner, and if there's any doubt, treat the invoice as unverified until you validate by phone with the vendor.
Before we close, quick housekeeping. We created a one-page inbox safety kit with a discovery checklist, email governance snippets, and a payee confirmation script. There's also a 30-day containment sprint you can download. It's a turnkey set of tasks and scripts, so you don't have to invent this on the fly. Jessica, Eddie, any last practical words for listeners who might be thinking, I don't have time for this.
Do the inventory first. It's quick and tells you whether you should panic or prioritize. If you find nothing, you've still earned confidence. If you find a problem, you've made the right people accountable, and that alone prevents a lot of downstream cost.
Small changes, big payoff. One MFA setting and one confirmation script can stop the majority of these attacks. Treat it like maintenance. A little time now saves major headaches later.
Okay, recap in one sentence. Inventory the 3 priority mailboxes, assign owners with exact outreach scripts, enable simple technical controls, and run a 30-day sprint using the kit we created. For the templates and the sprint checklist, go to hiddenbusinessrisk.com and download the Inbox Safety Kit now.